Welcome back to the CryptoWorld channel, everyone. My name is Josh, and right now is a crucial time for both Ethereum and Bitcoin. And in less than 2 days from now, we have new inflation numbers coming out, which would likely have a significant impact on the prices of crypto. So I'll be covering all of that and more in this video. Definitely stick around. First of all, just giving you a quick update on what the US stock market did today. This right here is the NASDAQ 100 index on the daily time frame. And obviously, you can see that we've gotten a rejection from this horizontal line of resistance based on this previous high that we formed towards the end of last month. So today, we've seen some red in the NASDAQ 100 index, which are the tech stocks, which has also transferred over to some red price action in crypto prices. And just before I get into the crypto part of this video, just quickly reminding you that in less than 2 days from now, we have new inflation data coming in, which is the CPI data, of course. And the last time that happened was on the 10th of June. And obviously, you can see how well that panned out for the stock market and also crypto. And that was because we got inflation numbers coming in a lot worse than expected, which resulted in the Fed hiking interest rates higher than expected. Because before we got that bad inflation data coming in on the 10th of June, the majority of the market was pricing in a 50 basis point hike to happen during June. But then as soon as we got that bad inflation data on the 10th of June, the majority started pricing in a 75 basis point hike instead of just a 50 basis point hike. And for those of you who might be new to the channel and new to all of this, the higher the Fed raises interest rates, the more bearish that is on markets. And really the main reason why the Fed is raising interest rates is to bring down CPI inflation. So if those inflation numbers come in a lot worse than expected, then that gives a signal to the Fed to raise interest rates higher than they were planning. And because higher interest rates are bearish for markets, obviously that means prices go down when we get that really bad inflation data, just like what we saw on the 10th of June. And now taking a look at that inflation data, what we got back in June was a year-over-year inflation rate of 8.6% according to the CPI. But leading up to that day, the majority in the market, based on consensus and the trading economics forecast, were predicting for inflation to come in at around 8.3%, but instead it came in at 8.6%. So just that extra 0.3% difference is a big difference when we're dealing in a market like this. And the next lot of CPI data, which will update this inflation rate, is coming out in just less than 2 days from now on the 13th of July, 12:30 p.m. GMT time. And by the way, as soon as those numbers come out, literally within minutes of those numbers coming out, I will immediately tweet them over on my Twitter. So make sure you're following me over on my Twitter. The link is down in the description if you want to keep up to date in real time. But basically, right now, the expectations are at 8.8% according to consensus and the trading economics forecast. So it's extremely likely that the majority in the market has priced in inflation numbers coming in at 8.8%, which means if inflation numbers come in at 8.8%, then we might not see anything too crazy because once again, the majority is already expecting that. But if we don't get an 8.8% inflation rate, then we could see a lot more volatility. Basically, the further the numbers are away from 8.8%, the more volatility we will experience. So if we just see an 8.9% inflation rate or an 8.7% inflation rate, we still might not see anything too crazy. But if we see anything into the 9% region, then it's very likely we'll experience another dump across the stock market and in crypto. But on the flip side, if inflation somehow declines from what we saw last month, so basically if inflation comes in under 8.6%, let's just say, then we could actually experience quite a significant pump across the stock market and in crypto. But between now and when those numbers come out, there's really no way in telling what the actual number will officially be until it actually gets released, obviously. But anyway, getting into the Bitcoin part of this video, this right here is the daily Bitcoin chart. Looking at the Bollinger Bands indicator, we're still in this squeeze formation that usually happens just before an extremely volatile move, just like what we saw around 1 month ago and also like what we saw towards the beginning of May. But there's not much else to say about this chart that I haven't already said over the past couple days. So if you're new to the channel, I strongly recommend you checking out my last few videos that I've posted over the past few days. And while we're on the daily time frame, taking a look at this Bitcoin chart, which is still in this choppy sideways price range. And obviously this price action combined with the daily Bitcoin RSI looks extremely similar to what we saw around 1 to 2 months ago. And what is really interesting is if you take a look at the last time we got new inflation data, once again on the 10th of June, on the 3 days leading up to that day, we saw red price price action for the Bitcoin price. Because in this type of market, any major uncertainty, like what we have coming up in a couple days, is seen as an extra risk in the market, and some people like to sell in advance in case those numbers are bad. And that is potentially what we've been seeing over the past few days, just some people getting out of the market in anticipation of potentially numbers coming in worse than what we expect. But once again, if you're talking about what happens after we get that inflation data, obviously it all depends on what that data actually is. So just because we have a lot of similarities this time round to what we saw roughly around 1 month ago, it doesn't mean we're going to see the exact same outcome, because we might not see the exact same outcome for inflation. And based on this previous example, I don't expect the Bitcoin price to break either resistance or support from this sideways price range until we get that inflation data, which means between now and around 2 days from now, it's very likely that the Bitcoin price is going to remain in this choppy sideways price range in between roughly 19,000 and 22,000. And if you're zooming into the 12-hour Bitcoin chart, we still have this potential ascending triangle pattern in its formation phase, where we have resistance sitting at around 21.7k approximately based on this previous candle close, and also all of these wicks showing a lot of selling pressure in that region. And obviously during that entire time period where the Bitcoin price was trading at around 22,000, I was saying in these videos that if we do not see a daily candle close above this line right here, then we do have a risk of a rejection potentially down towards this ascending line of support. And right now we're closer towards this line of support than that level of resistance. And in fact, this line of support is currently coming into play at around 19.6k approximately. And other than that level of support, I would also be looking towards the golden pocket in the Fibonacci retracement tool, which is sitting at around $20,000 per Bitcoin. And now zooming into the shorter term, taking a look at the 4-hour Bitcoin chart, obviously we still have these bearish indications in the price oscillators, which is what I've been talking about ever since this point right here, because lower highs and lower lows forming in the 4-hour Bitcoin RSI, as well as a bearish cross in the 4-hour Bitcoin MACD, are both short-term bearish signals telling us that we've lost that short-term bullish momentum and we're due for a bit of a pullback. And right now, these indicators haven't flipped bullish just yet, so technically speaking, we're still looking more bearish than bullish in the immediate short term, just on the 4-hour time frame. But with that being said, the histogram within the MACD indicator is slowly rising back up on the 4-hour time frame, which means we might be seeing reduced bearish momentum in the immediate short term. Once again, this hasn't flipped bullish just yet. And looking at the 4-hour Bitcoin RSI, we're getting closer towards oversold territories, which previously provided a short-term bottom for Bitcoin, but we are not there just yet. So technically speaking, in the immediate short term, there is some more room to the downside, but that room to the downside, according to these indicators, might be somewhat limited before we get some sort of short-term bounce. But as I've been saying, that would likely happen if we actually see some more bearish signals in these indicators, like the RSI reaching oversold, or more importantly, starting a new uptrend with higher lows and higher highs, or potentially seeing a bullish cross in the 4-hour Bitcoin MACD. Those are the sort of bullish signals that I'll be looking out for that we haven't seen just yet at the time of recording this video. And now heading into the Ethereum part of this video, this right here is the daily Ethereum chart looking at the Bollinger Bands indicator, which is still showing this squeeze formation, telling us that we're due to see an extremely volatile move potentially within the next few days. Because when it comes to the Bollinger Bands indicator on the daily Ethereum chart, we've already been in this squeeze formation for well over a week now. And looking at the last 2 times that happened, it was within around 1 to 2 weeks after we got that squeeze formation. That was when we saw that extremely volatile move in the price of Ethereum. So just keep that in mind, potentially within a few days and most likely around that inflation data, that could spark an extremely volatile move in the price of Bitcoin and Ethereum. And also towards the end of this month, we have another Fed meeting, which could also cause more volatility. But other than that, there's not much else to add here on this chart. Once again, if you're new to the channel, check out some of my previous videos that I've recently posted. But if you're zooming into the 12-hour Ethereum chart, you can see that right now, as I'm recording this video, the price of Ethereum is testing this ascending line of support, which is coming into play at around 1,120 approximately. So if we end up seeing a confirmed break below that level, meaning something like a daily candle close below around 1.1k, then that would obviously mean that this ascending triangle pattern would be breaking to the downside, which obviously would be bearish market structure. So if the price of Ethereum confirms a break below this upper trending line of support, then I would expect a drop down towards this previous low, which is sitting at around $1,000 per Ethereum. And we also have a lot of support around around 1050 based on the 38.2% Fibonacci level on the weekly time frame. So basically, this small price range down here that Ethereum was in towards the beginning of this month is where I would be targeting next if we confirm a break below that upwards trending line of support. And anything below $1,000, basically if we break below that previous low, then I would expect Ethereum to revisit that initial low that we saw back in June. But once again, as I said right here, until we actually confirm a break of this level, there is still a possibility that we could see a bounce from this upward trending line of support, just like out back here. Until we actually confirm a break above this resistance, there's still risk that we could actually get rejected from that line of resistance, even though the price was trading right at that level. And in Bitcoin's case, the price was temporarily trading above the resistance, but that only turned out to be a candle wick. And if you're zooming into the shorter term, taking a look at the 4-hour Ethereum chart, once again, these bearish indications are still here, but we're seeing somewhat reduced bearish momentum. Looking in the 4-hour Ethereum MACD, specifically the histogram is slowly rising, but we haven't yet seen the bullish flip over in these indicators, which means technically there's still some room to the downside in the immediate short term for Ethereum. So based on all of this information throughout this video, one of the most likely scenarios for Bitcoin and Ethereum over the next 1 to 2 days leading up to that CPI data would potentially be a continued short-term pullback, as we have a lot of uncertainty leading up to that day. And then once we officially see those numbers in less than 2 days from now, that could spark another direction, either significant bearish price action if we get really bad numbers, or on the flip side, if the numbers were actually much better than expected, that could spark a decent relief rally in the price of Bitcoin and Ethereum. And if you want to know how to trade these moves in the market, no matter what direction the price is heading, check out one of these videos popping up right here on your screen. The video in the top left shows you how to make money if the price is going up or down, and the video in the bottom left shows you how to make money in a choppy sideways price range. But anyway, that's everything that I have to say for today. I really hope you enjoyed, and I'll see you all in the next video.